A simple and profitable Forex scalping strategy on the 1-minute time frame. Sounds great, right? Well, we all want to open and close our trades fast and cash out that amazing profit. But is this strategy profitable? We need to test it 100 times to find out. So let's get into it. Alright, let me tell you a little bit about this simple Forex scalping strategy. And as usual, we're going to go over a couple of examples first, then get it tested 100 times. So make sure to stay around till the end. So this 1-minute trading method is labeled as a simple and profitable Forex scalping strategy that could be used to trade Forex, crypto, or even the stock market. It's based on two simple and free technical indicators, and it can be used around the clock, which means all day and all night without stopping. I didn't invent it, to be honest with you, but I received it from Andre, who is one of our subscribers. He included the link to the breakdown of this trading method, where it's mentioned that it's a trend-following strategy. That's my favorite kind. It's always important to backtest your trading strategy before using it to trade your hard-earned money. Trading is a popular way to make money, but it also requires a good strategy and reliable money management skills. By the way, you can also submit your trading strategy if you want us to review it at www.tstlife.com/submit. We only need two indicators, the moving average and the stochastics oscillator. That's all. So let me give you more details about it. The first thing is obviously opening up the 1-minute chart, then adding the indicators needed to run this trading strategy. So let's add in the exponential moving average, 50 and 100 periods. To differentiate them, I'm going to set the color of the 50 EMA to green and the 100 EMA to purple. We can also adjust the width if we want to make things easier for us. So the green thin line is the 50 EMA and the thick purple one is the 100 period EMA. Now, let's add the second indicator. It's none other than the stochastic oscillator, a momentum indicator that's widely used in Forex trading to pinpoint potential trend reversals. This indicator measures momentum by comparing the closing price to the trading range over a given period. I'm sure you're familiar with this indicator as we've covered it multiple times in the past. But basically, like other range-bound momentum oscillators, such as the Relative Strength Index, RSI, and Williams %R, the stochastic oscillator is also useful for determining overbought or oversold conditions. Ranging from 0 to 100, the stochastic oscillator reflects overbought conditions with readings over 80 and oversold conditions with readings under 20. We need to highlight the two levels 20 and 80. I'll use different colors to differentiate them, the 20% level in red and 80% in the green color. That's all we need now. So quickly, when should I buy or sell according to this trading strategy? Let's begin with the buy setup. Well, we just need to wait for the 50 EMA to cross above the 100 EMA. Then we're going to wait for a pullback, which is only confirmed once the 50 EMA crosses below the 100 EMA line. Once the two conditions are met, we'll go long as soon as the stochastic oscillator reading goes above 20%. Simple, right? By the way, I couldn't find a clear risk-to-reward setup, but since it's a 1-minute trading strategy, I'll risk 2% of my account in all trades. So let's go for a 1 to 1.5 risk-to-reward ratio. So the stop loss will be located 10 pips away from the entry, and we would aim for 15 pips take profit. Let's look at this example from the chart. We can see the first EMA crossover here. The 50 periods EMA has just moved above the 100 EMA, which means that we should be expecting a short-term uptrend. The next step is waiting for a nice pullback to go long. We'll only consider pullbacks that are strong enough to get the 50 EMA crossing below the 100 EMA line. That's what happened here. Now we just need to wait for the stochastic oscillator to go above the 20% level. Voila! We go long here, and it's a successful trade. What about the sell setup? Nothing special here as well. The 50 period EMA moving below the 100 period EMA is a signal that the pair is entering into a downtrend phase. After the price finished its strong down move, we'll look for the second crossover. At that stage, we can go short as soon as the stochastic indicator moves below 80, indicating that the market isn't overbought anymore. Here's a short example from the chart. The 50-period EMA has just moved below the 100-period EMA, and this strong downtrend is formed. We shouldn't go short here as the pullback is expected soon. Once the second crossover occurs here, we start looking at the stochastics indicator and go short the second the value moves below 80. Awesome! Another successful trade. Two successful hand-picked examples are not enough to tell whether a trading strategy is profitable or not, so it's time to begin the 100 testing process. Is this a profitable scalping strategy? Can we use it to trade Forex or other financial markets? We'll find out soon, so let's get into it. I'm going to fast forward the video while waiting for the final results. Please give this video a thumbs up if you enjoy this type of content. It helps the channel grow and encourages us to make more videos in the future. Alright, we're done. Let's look at the results now. It took us 18 days to complete the 100 trades. That's an average of 5 trades per day. We've recorded 47 successful trades, which is fantastic considering the 1 to 1.5 risk-to-reward ratio we're applying. 5 consecutive losing trades were recorded with a total drawdown of nearly 12%. That's alright, but can be reduced for sure. And the biggest question is, how much money have we made? Well, we began backtesting with an initial balance of $1,000, and we ended up with a $1,350 final balance. That's $350 profit. All trades were closed on the same day, so no need to worry about any extra swap charges. I think it's quite a simple and profitable Forex scalping strategy. I'm just afraid that this trading method doesn't give us much time to think and make decisions, and we'll definitely need a high stress tolerance to manage the extremely volatile market. But the best part about it is the fact that all trades are executed with a clear take profit and stop loss level. So even if there are any surprises, you'll only lose 2% of your account. Well, thank you, Andrew, for sharing with us this trading method. I think the next step is building a robot that trades using this strategy. We won't use any real money at the moment, only to backtest the scalping strategy for a longer period. This method gives us at least 5 entries per day. If we use a robot to test it, I'm sure the one-year trading journal will include some very interesting facts about this 1-minute trading strategy. Feel free to give the video a thumbs up if you want us to do that in the future. Let us know in the comments section if you have any ideas on how to optimize, and don't forget to subscribe to our channel and press the bell icon to get new video updates. Happy trading!